we're going to get started. We've got 3 more talks. A taller, more handsome-looking version of me.
Could be brothers.
Mr. HMO, Mr. Instagram. I'm going to hand over to Mitch.
Cool. No pressure. So for those of you that don't know, my name is Mitch Nunn, and today's session I'm going to be talking about why HMOs. So that's going to be looking at the wider landscape and why I think that HMOs are going to play a real vital role in providing housing in the future. The investment opportunity, so why I personally invest in HMOs. C4 versus Sui Generis. I've put that in there because I see a lot of people sort of just doing 6 beds to avoid the planning process, and actually by doing Sui Generis you exponentially improve the numbers by adding additional bedrooms. Going to do some deal analysis. We're going to look at some of my previous deals and the numbers around those. None of them look as good as Schwen's deals, unfortunately. But we're also looking at doing some bigger stuff, which is a bit more juicy. So that is the scaling up, commercial to HMO. Our progress to date, and sort of what we're looking to achieve in the near future, how we're financing that growth, because I think that's quite interested in how we're financing the projects. I've also put there the importance of building a brand around your HMOs, and then I'm going to talk about some education, some community. I'm going to be selling the course at the back of the room for half price. I'm not really. And then if you've got time at the end, we'll do some Q&A. So who am I? So I'm Mitch Nunn, based down in the southeast, down by the sea. We predominantly sort of do developments within Southend Westcliff area. And the reason for that, people always ask me, so why that area? Well, it's on the doorstep. It's the right stock. So when you're converting HMOs, ideally you want the right stock. The right stock being like a 1900 Victorian house, which is a lot bigger in size, so like 1400 square foot, that sort of thing. When you go to like a 1950s build, you get like 1000 square foot. This is a lot harder to sort of subdivide. So, choosing an area with the right sort of stock is important. I do invest up north as well, but I'm not going to start doing Sui Generis HMOs 4 hours away. It'd just be a nightmare to manage. So, got 12 years experience. So I bought my first property in like 2012, and I'll go through that journey on the next slide. Got about £12 million of property, and that is predominantly made up of like single lets and also more recently HMOs. I've got some land, but I'm selling the land because it's not what we do. Current focus obviously HMOs, that's why I'm here. And I must say that I've probably not done as many projects as some of the other guys in here. But I think the reason why I'm here today and the reason why we're getting a bit of traction on Instagram is I think we do it quite well. So, if I don't mind saying so. Before sort of going like full steam with HMOs, I've founded, scaled and exited 2 businesses. So one of them was a property management business. We sort of tripped into, we were buying like freehold ground rent portfolios. So we set up a management company called Urban Life. And I think that was 2014. We sold that in 2019 to Warwick Estates. And I also had a site security business. So on development sites, we were doing security, cameras and bits. We were working with Bellway, Taylor Wimpey and all the big national builders. And I sold that in 2021. So that really allowed me to go sort of full-time into property. And sort of not have any staff, which is nice. So my journey so far, as I said, I bought my first property in 2012. My first ever development in 2016, we actually bought a freehold ground rent out of Allsops auction for 50 grand. And we then got planning to put 2 bedroom flats up in the loft void. And so as you can imagine, I've never done development in my life. And my first development was taking the roof off of a block of flats in the winter, like above 12 other leaseholders, and building flats. So it was a tough one to manage. Luckily, I sold the ground rent portfolio, especially with the Leasehold Reform Act that's sort of come in recently. I invest in Warrington up north, so got quite a few properties in Warrington, purely again just for yield. So I was buying a lot of single lets while I was running the businesses, because as the businesses were more profitable, I could invest in single lets and it didn't take much of my time up. So, but I did my first HMO in 2020, so only 4 years ago. Went straight in with a Sui Generis 8-bed. I probably wouldn't recommend that. I'd say cut your teeth on a 6-bed, get some experience around you, but that's what we did. Completed my first commercial to residential scheme in 2023, so last year. That was a 7 flats with a GDV of about 1.5 million. So why HMO? So before we go into like the investment sort of opportunity, I wanted to spend a bit of time on just looking at the wider picture, the sort of landscape and some social trends that are like happening, which I think are going to support the requirement for HMOs, and how they're going to play a real vital role in the future of sort of bridging the gap with the undersupply of housing. So obviously everyone knows inflation peaked out 11%, as Amar said, we're back down to 2%, but obviously, you know, interest rates have gone up, the cost of borrowing's gone up, and obviously that if you're a landlord, obviously that cost's been passed on to tenants, and if you're, so obviously, you know, and also if you're looking to buy a property, you obviously with your affordability being reduced, you've then had to opt to stay into rented. So it's created more supply in the rental market, which obviously pushed up rents. So as flats become more affordable, because people say to me, well, you know, what, people paying like £800 a month? I mean, obviously Amar does rooms for £1,200 a month. We do rooms at £1,000 a month, but people can't get their heads around why they're £1,000 a month, and that is because, you know, if you get a 1-bed flat, 1,000, by the time you've done the bills, etc., you know, you're going to be at £1,400, and that £400 difference is, you know, is the difference between someone maybe, you know, being able to afford food or not throughout the month. So the government obviously proposed 300,000 new homes. Obviously got a Labour government now. I think their manifesto said 1.5 million homes over the next 5 years. Obviously we're below that target, so lack of supply, obviously, and increased demand. Yeah, and whether they actually ever hit these targets, you'll probably never hit the targets because of the bottlenecks with the planning process. The reason I'm selling the land is because I've just got deal fatigue now, and actually I got planning about a year ago, but I still haven't had the pre-commencement conditions signed off. So I'm just going to sell that on with planning. And there's a reason, I think, under the Conservative government, there's been 16 different housing ministers. So yeah, so whether that actually changes or not, but I'd guess probably not. We've got a growing population, so currently 67 million, it's going to be 70 million by 2026, and actually by 2036 actually will be 74 million. Net migration, which is really high, 672,000. That growing population is on the assumption that net migration is 300,000, so it actually could be a lot more. People are opting to have families later, so the need for a family home is obviously, you push that further, so it creates more demand on, you know, single occupancy property. I've put divorces in there as well, because we actually get a lot of people make inquiries that are having struggles at home, you know, with the partner, and they just need some short-term accommodation. That's actually 80,000 divorces each year. That was actually, it's down 30% since 2021, but I guess that's the sort of, it's the overrun of COVID. I mean, we probably all could have got divorced in COVID, couldn't we? So it was pretty bad. So got the NHS. They're the 5th largest employer of people in the world. It's actually 1.7 million employees, but it works back to 1.5 million full-time employees, and circa 20% of those come from overseas. So 260,000 to 300,000 people come to work for the NHS from overseas each year. We actually rented our first HMO to the NHS. So I don't know if people are aware, but when the NHS, you know, provide a contract to an overseas worker on a 3-year contract, they will provide the housing for the first 3 months, and then obviously once they've had 3 months, and they'll just go out and find alternative accommodation. So as I said, we rented our first HMO to the NHS, and we are looking to provide more housing to them in the future. Got university applicants up, so 35% of 18-year-olds go to university. That was actually 37% last year, which was the second largest number of applicants registering to go to university. And so a lot of those, they may be within their home sort of location, but a lot of them will also go and travel to other areas of the UK. And I think the first years they'll stay within the halls, but then obviously as they sort of branch out, second years they'll go find HMOs. There's some good opportunities around university towns and etc. And also we're still in this sort of post-COVID era of working from home and living flexibility, and sort of I think HMOs will sort of fit quite nicely within that sort of flexible living arrangement. So the investment opportunity, this is the way I see it. So obviously demand for HMO rooms at an all-time high because of the reasons stated above. For me, I find like HMOs are the sweet spot, like the effort versus return. So, as I've done single lets, which is great, you might get, down south you might get a 5-6% yield, up north you might get 9-10% yield, in London maybe a 3-4% yield. And you can just, buy it, give it to an agent, you probably won't ever hear from that again. The other end of the spectrum, you've got service accommodation, but it's a lot more effort. There could be a bit more of a return, but there's a lot more effort. And I kind of see that for SA to work, I kind of see it has to be more like a trading business. You have to have infrastructure, systems, processes, whereas HMO for me sort of sits in the middle there. It's a bit of a sweet spot where you can still act as an investment company rather than a trading company. So I quite like the effort versus return. Can build equity through development, so obviously go through that full buy, refurbish, rent, on however many hours you want to go through. But once you've gone through that full cycle and you've extracted your investment, obviously we always try to achieve like a 50% ROI or ROCE once we've gone through that full cycle. Commercial valuations, it's a massively grey area, and I'll show you some examples in the next slides. Obviously we always do Sui Generis HMOs, so we always give ourselves the best opportunity, but even then you can't be guaranteed a commercial valuation, so we'll speak about that in a minute. I always find there's like an abundance of opportunity. I always say there's a lot of chimney pots, especially at this level. There's a lot of houses that can be converted to HMOs in the right areas. So I always find that we've got a healthy pipeline, and if you were looking for land deals or commercial to resi, it seems to be a bit more of a restricted market, so there's a bit more competition there. And I always think it's a low risk strategy. So I always say, when you look at across all of our pipeline of projects, I'm never going to lose my shirt, because we can pretty much control the whole process from what we pay. We've got an in-house build team, so what we spend on the conversions, we've got all of the comparables, so we know what our exit valuations are going to be, we know what the room rents are, so it feels all in our control. The only thing that probably isn't in our control is the planning element, but if we just sort of work to the national guidelines, and obviously we spoke on planning a lot today, then you sort of mitigate that risk. So is it a saturated market? We're all here today to talk about HMOs, and you would think that it's a bit of a hot topic at the moment with interest rates high and everyone trying to find that additional yield, but actually HMOs are on decline. So the Office of National Statistics reveals that number of HMOs recorded in England has actually dropped by almost 10% since 2018. I've listed a couple of reasons why. So I think the mandatory licensing, so up to September 2018, it was mandatory licensing was only for 3 or more stories. That changed obviously after September 2018, and mandatory licensing required for 5 or more persons. So that would have obviously had an effect. So if properties probably didn't meet sort of licensing and space requirements and sort of health and safety and all that sort of thing, chances are they probably would have been converted back to single dwelling. or something. So you've got obviously uncertainty around the council tax, obviously Wendy spoke about earlier. And I mean, that was actually a big reason why I was questioning whether to go into HMO, was the uncertainty around the council tax banding on the individual bedrooms. But obviously since that's been cleared up, sort of thanks to Wendy and team. But I do think that would have played a factor. So with the uncertainty, people may have sold off HMOs. And then obviously the Section 24 tax changes and just the general consensus that there is, landlords leaving the market. So gives us the opportunity to sort of rectify that. These are our latest projects, all pretty much within a similar area. Obviously operate outside of an Article 4 area. We've obviously done 8 beds, 7 beds. We always work with 8, 7. We are looking at some 9s, but we've never done anything sub that. So they're always Sui Generis HMOs. Obviously, I probably don't need to cover this off because it's been mentioned today, but obviously C4, dwelling that falls within use class C4, is a small shared house occupied up to 3 to 6 people, which I actually took that explanation from the Planning Geek website. So thanks, Ian.
Don't believe what you read on the internet.
I can trust you though.
Or even on slides.
yeah, don't trust any of this. No. So pros and cons. So for me, we always do Sui Generis HMOs because you exponentially improve the yield. So as you fold in the bedrooms, so more bedrooms, the yield gets exponentially better on the yield you generate, but then also subsequently the valuation. So we're going to look at a few examples there. I've put in the commercial valuations, but again, you give yourself the best opportunity at getting a commercial val by doing a Sui Generis, but it still is a little bit of a grey area. Maximising the value, so obviously sweating the asset. The cons, obviously there's some planning risk and delays. We always go through 2 planning applications when going to Sui Generis, like others have said. So we'll buy a C3 house, we'll then convert that to C4, and then we'll go full planning app Sui Generis to get the additional bedrooms. So there was obviously additional cost there, and it can lead to delays because obviously there's 2 applications. Conversion complexity, there's obviously far more regs in a Sui Generis HMO in terms of fire alarms, build regulations, etc. So my advice is, if you're going to go Sui Generis, get a building control officer that you can actually work with. It's really, really important because that can vary so much. You could go to one building control officer and he'll say, want fire smoke lobbies for a 7-bed. You'll go to someone else and they won't require those. So yeah, working with a building control officer that you can work with is really important. Obviously high conversion costs because the level of detail that has to go into converting a Sui Generis, slightly higher operating costs, but your operating cost as a percentage of your overall income is less. And then obviously lender requires some experience, I guess, when you get up to Sui Generis. I had a friend who went straight in with a 9-bed, and yeah, it all went fine. Got planning, come out the back end. I think she was limited on options. I think she had to go with land bay at 6.5% with a 5% arrangement fee on like a £500,000 loan. It was it was eye-watering. So that's why I always say, cut your teeth on a 6-bed, get the experience, and then that will obviously help going forward. So I've just put this in as a bit of a cost comparison because, as I said earlier, there's a lot of people I see online that are doing 6-beds purely to avoid the planning process. But as you've seen in the room today, it's quite a straightforward process. So don't be scared of it. It does take time, and there's some additional cost there. But as you can see, it's definitely worth doing. So there's an example here based on the same house, and obviously we've done a lot of these now, all in the same area. So I've basically used averages, but obviously purchase of the same house at 320, cost of works on a 6-bed at 120. You'd probably you'd be just converting the existing floor plan. With the 8-bed, you'd be converting the loft. So obviously there's the additional cost there. Other costs, total cost, GDV, that's sort of what we work to in Southend, Westcliff. So 550 valuation for a 6-bed, 675 for an 8-bed. But because you're getting, then when you're refinancing, you're getting 75% of the increased value on the 8-bed. You actually could be leaving in less money by doing the 8-bed than the 6-bed. So you're not leaving any more money in, even though you're having to front that cost. You'll get that back on refinance. But then obviously where you then obviously benefit from that post-works, once you refinance, the return on capital left in the deal post-refinance is, you know, like I said, exponentially better. So, but there is this is quite interesting because a 7-bed could actually become quite a sweet spot, because you could also do 7-bed on the existing footprint without converting the loft. Your cost is obviously not as high as the 8-bed because you haven't got the new loft conversion, which means actually when you work that back, your return, or your ROI or your ROCE is actually higher than the 8-bed. Any questions?
I've got some, but I'm saving them.
You save them, yeah. So I thought I'd include the floor plan. So this is the typical house. And actually, if you look at all of the floor plans that have been shared today, it is that typical style Victorian house. If you had the 1950s 1,000 square foot box house, it's like a box like that. But where the large Victorians, they're set back, and they're all a similar sort of, if you looked at all of our floor plans, they'd all be like almost like carbon copy. So, so going back to those examples, when you think of the 6, 7, 8, I just put this in here to show you. So obviously downstairs you'd always have the 2 bedrooms, large kitchen. So for a 6-bed you need, I believe it's 15 square metre kitchen, and then when you go 7 it's 18 square metres, and then 8 to 10 it's like 24 square metre kitchen. So 2 bedrooms, and then you've got 3, 4, 5, 6. So that could be, if you're doing the 6-bed, you would leave this stud wall here, and this would just be a big bedroom. And that would be a 6-bed without, obviously 6-bed under PD. But if you want to achieve 7, you could obviously divide that room up. That could become a 7th bedroom. We're actually showing that as a TV room at the moment because we've actually created two rooms up in the loft. So this could actually become a 9-bed. We haven't gone to planning for a 9-bed yet. So what we're doing on this one is we are obviously going C3 to C4 6-bed. We're then actually going to go to 8-bed and leave the TV room, and we're going to trade like that for a period of, and then we're going to then go back in for a 9-bed. So I'm going to try and grab in on that. But it seems like a logical route, just like going through the steps, because as you said, when you go through planning to add an additional person, it's pretty straightforward, hopefully.
It's easier to create the rooms first rather than have planning to build extensions at the same time.
Yeah.
So you're doing exactly right.
Now, I think this is now up to about, I think it's like 180, 190 square metres. Yeah. So when we bought it out, it would have been, I'm guessing, something like 140, 145 square metres. We did the loft, yeah, and obviously we developed the outrigger. This is a mid-terrace, so obviously you can go 40 cubic metres on your loft.
Is there a minimum requirement for the width of the house?
I don't know. If you don't get the width on the house, it's a real struggle. I think these houses are about 6 metres. If you don't get, because you will find them about 4.5, and it's a real struggle to then subdivide that bedroom. So that's quite important when you look at these houses, is that width of that front bedroom.
Actually, the narrowest house I've converted to 4 metre.
Oh, was that the one that you did the? Yeah, the.
I can do 6 bedrooms all en suite.
Well, that's why we're going to lunch.
I can send it to you online. Maybe you can do the end.
You've shown it to me as well, Shed. I remember it, and you've like converted under the stairs and all quirky spaces, everything.
Fucking die up here.
Amazing. Guys, just because obviously people have got questions, but you're not being recorded when you are asked the question, so just write your questions down, and at the end, we'll blast in with 10 questions or something at the end. Yeah.
God, no. All right, let's do it.
Fire away.
So this is one of the projects that we did, and don't look at that. I chuckled when Sven said that she doesn't do any deal that she has to leave money in. Look, I mean, this is property. Like, the ideal scenario is, don't leave any money in and just, build the biggest portfolio. But sometimes it does go against you. So this is an 8-bed that we did. Bought the house for a little bit more than the example, but it was a nicer house on a better road. It's just a much bigger house. We ended up spending more money on it. And then we actually only got a 700 grand GDV. I mean, this house would generate the same gross rent as what your house generates that you did. And you got an 850 valuation.
That's the lender choice.
Yeah.
I was going to talk to you about this because you're using Paragon quite a lot.
I know, but it's cost me. But I think
the rates are amazing, but the valuations are not.
So, and obviously, so we always use the Paragon in-house surveyor as well. Yeah. And usually they only give us 70% loan to value. But actually on this loan, they said, because I had the senior underwriters come down from Birmingham to actually see all of the portfolio. And they, you're doing things properly. We're going to give you 75% loan to value. And I went, oh, great. Yeah, that'll help out. You're thinking on a 700 grand property, you'll probably be releasing 35, 40 grand more. And then they just downvalued it anyway. So I'm actually no better off. But I mean, to achieve that 700 grand, that was, I think they, on the valuation, deducted 11% of growth and then gave to 10.7% yield, which is, it's poor. But I think while interest rates are still quite high, we're happy to borrow a little bit less. But also, we have gone back for planning now to put 2 rooms in the basement. So it could actually become a 10-bed. Probably in hindsight, we probably should have done the basement and included the basement rooms as within the 6 under permitted development, but we just decided to do that way. Looking at the numbers, I mean, we'll still return roughly about 35% return on the capital left in the deal. So that's probably one of the not the worst deals, but not one of our better ones. If that had been a 750 GDV, which is what we put the application in for, it meant we're probably leaving circa like 80 grand in the deal, which probably would have been fair. But
sorry, I just want to ask it. Have you already got so you're applying for 8 beds straight away?
We've already got 8 beds on. We've already got 8 beds on this. So now we've gone to ask. We have 2 more rooms in the basement. So this is our other one. This is our more recent one. So we bought the house really well. I mean, I literally went in, did the viewing, and went, I'll take it. Like, stopped doing viewings. 300 grand house. We spent 200 grand again because we developed the loft and the outrigger. I've done a slightly different, lower GDV on this because the same number of bedrooms as the other house, but the other house is a better house. That's this is like mid-terrace. 75% mortgage. Money left in is roughly about 36 grand. Obviously rents really well, so that return on capital is a bit more interesting. And as I say, going back to my other slide, we're always trying to achieve circa 50%. That's a sort of sweet spot for us, but obviously if we can do more, great. Obviously there's no allowance in here for void, so if you want to obviously reduce the numbers based on maybe like a 5% void or whatever. But we're scaling up because, again, probably after the disappointment of this valuation, I think if it looks like a house and smells like a house, there's almost a little bit of bias with surveyors. But obviously now I know I'm just going to use a Mars surveyor going forward. But we're going to scale up to commercial to HMO. So this is the building I've just exchanged on. It's a 3,500 square foot commercial unit with car park around the rear, and the idea is to retain the commercial on the ground floor and then convert the upper parts, and that's what it's going to look like this. So that's obviously, I don't know if you see, that's the ground floor, first, second, third. So it's going to be obviously retain the commercial. Then it's going to be a 12-bed HMO. 12 bed, 12 bathroom, 30 square metre communal space, and an off suite as well.
GDV? Oh, you're ahead of me, mate. Well done.
Old horses. Yeah, so buying is 600 grand. Stamp duty costs. Cost of work 285. I know Wendy said earlier she works for about 33 grand a room. We generally work for about 25 grand a room. I mean, basically we've got our in-house build team, so I've got 6 lads actually. He heads up the build team. He's my brother-in-law. So
Why aren't you at work?
he's going to charge me for today as well. So 285, that's just going to be an internal refit. Obviously on the upper parts there's no structural work really, it's just all internal fit outs out. Cost about 968. I've put the GDV at commercial 235 grand, so that's based on the market rate should be like 20 grand a year, 8.5% yield. A 12-bed HMO element I've put at 1.15. That's 12 bedrooms at 850, which the rooms rent would be a lot more than that. I mean, there's like 13, 14 square metre rooms in there. They'll be probably nearer to 1,000, 1,200. So that's really conservative. 850. It's gross rent 122, and then I've discounted that 15% and give it a 9% yield, which I think I'm pretty conservative. So GDV should be about 1.4.
Is that with the commercial element?
That's with the commercial, yeah. So on refinance, I put 70% in there, but again, because it's going to be commercial, part HMO, I don't know how that's going to work. Commercial is generally 65%.
You can get 75% from Inscale just on Hampstead.
Yeah, so
Stealing my thunder, please. Cheers, cheers, James.
Yeah.
You just
So
said
I'll
it
just
to
put
me.
it at 70. I think that's where it lands. And then that money, this is a good deal. This one, I've left no money in this one. So the idea is obviously.
I got 300k.
Yeah. I've got enough for a decent night out for 5 grand. I've got a 1 point. You know, someone wants to give you a 1.4 million pound asset and pay me 5 grand. I'm happy with that. So.
How did you find with the planning process?
Oh no, this is all subject to planning. So this might even fall through.
Well, I think it's going to be okay because about commercial is where they want HMOs.
Yeah, well, obviously the fallback position will probably be converted to 5 flats, I guess. But obviously, you know, based on this, it's going to be which one to choose. So, yeah, obviously give all the money out, gross income, allows for cost. That should net about 65 grand, 63 grand net as is. So, don't really need that one, do you?
Mm-hmm.
Live a modest life. So like I said, we actually haven't done probably as many as other people in the room. This is our progress to date. So, so we can complete 38 rooms, got 15 in construction, 27 in legals, 40 in planning. And yeah, so I just said to myself, I must get 100 bedrooms and then I'm going to assess it. It's an absolute headache. Do a complete strategy, but then I think, so, okay, this is, you know, let's get to 1,000. But
There's still a few. Richard can help you.
yeah, so, yeah, I will appreciate it. The reason why I wanted 100 is, like, to me that represents like a £1 million rent roll just out of 100 bedrooms. And that's assuming 100 rooms at an average room rate of like 825. So that's the plan. So how are we financing this growth? So we always use developer finance for the purchase and the works. We always use, I've always used them because we're in the relationship, but actually, you know, looking at the Octane deal, you know, there are better deals on the table. Headline figures are always 70% of purchase and 100% of build cost, up to a 65% loan to GDV. And we always use commercial acceptances, which is obviously like a subsidiary of Close Brothers. Again, because we've always used them, we've got a good relationship. I think there's a lot to be said for that. You can be slightly more on your rate, but once you've been through that full cycle, a lot of times you get to know them. They send out the same surveyor. It's almost makes your sort of whole process a bit bulletproof. Obviously, still need to get a better exit surveyor, but it seems to be working, so we sort of stick with it. So, on finance, finance company will only lend to you based on, you know, what the property can currently be. And because we don't do like subject to deals, we're always buying C3 properties. The lenders will always lend to us based on a 6-bed scheme, which in our area is 550. And our plan is to always convert them have them rented out by month 6, at least 6 of the bedrooms to offset the finance cost, so you're not paying any more than 6 months interest. What we do with the lender is we always take a 12-month term, but just get them to stop 6 months interest, so you get a slightly better day one loan. And because we're doing 2 planning applications, we always wait for, it generally takes to about month 7, 8 to get Sui Generis planning, and then obviously we've got Paragon to refinance, which, or whoever next. So obviously each deal requires roughly about 100 to 150 grand, unless a typical house purchase of 300 to 350. So what we usually do is obviously we've got some of our own funds that we use for the purchases, we do some JVs, and we also do private investor capital raise where we service like 1% a month. Obviously we've got a much larger portfolio outside of the HMOs as well, so we can also service the interest, that helps us leverage up. The portfolios, the annual turnover of the portfolio is up about 750, but at some point next year should be over $1 million. So this is, I've put this here, building a brand, because I don't think I was mentioning this. Do you build a brand around yours?
I don't, because HMO's not been my main strategy. It's just I'm a bit of a jack of all trades. But Cozy House, which is Schwen's brand, you were the first person to talk to me about branding your HMO rooms, actually. And I really like the way you've done it as well, because I just think if you're sorry, I'm going on a tangent here, but if you're building this HMO portfolio to scale to a level to the point where at some point you're going to exit, whether that's if you're big enough exiting to a REIT or to someone who wants to buy this cash flowing business, the brand I think adds huge value, that everything's the same. And you know, I've seen what you're doing Spaces 1, Spaces 2, and Cozy House do a very similar thing, which is probably why you won the various awards that you've won already. So, but you've got some competition coming up.
I'm not ready on
yeah, but yeah, no, I think it's a really good idea.
Yes, obviously our brand's called Spaces Co-Living, and because when you say to someone HMOs, instantly in their head they think bedsits, especially like an older generation, they just start horrified. We've got a councillor within Southend Council that anything comes through, anything HMO pulls into committee. I'm down there like every week. He don't annoyingly he doesn't ever show up, but he always puts it into committee, and eventually they get voted through. But that's people's perception of a HMO. So we think it's like really important to sort of build a brand around the HMO rooms. This is one of our houses. So this is space 38. It's one of the examples that I showed earlier. Just a really nice space for people to live. This is the 8-bed, 8-bathroom where we're going for 2 more rooms in the basement. This is the one that's 700 grand valuation.
Yeah.
Beautiful.
Yeah.
Round of applause.
So what we do to build a brand is obviously we've got so we do to let boards, we've got our Instagram page, we do cladders front and back. Also I put this picture up here of some guy moved in, room 5, and he brought donuts for the other tenants and just did a welcome note.
Yeah.
I just like that, so I thought I'd put it in there. So benefits of building a brand, I think being recognised as a quality operator builds credibility and trust with tenants and local authority. I always think that I'd like the opportunity for the local planning to come around and actually, to actually see this. What we're trying to do is to think like, it'd be an asset to the local community. Differentiation, so distinguish, like as there becomes more competition and more rooms available, to distinguish differences between competition and to stand out. Building community, so obviously tenant loyalty and happiness. Value perception, obviously maximise the rents, and that'll obviously help with valuations. Obviously hasn't helped me, but the idea is there. Professional image attracts higher quality tenants. We only work with working professionals at the moment. We're not doing NHS social housing, but we get doctors, nurses, pharmacies, high school teachers, and generally they're a lot easier to manage. So, and then obviously, I think Wendy touched on it earlier, but being systemised and having a brand that attracts investors' reputation. Just to quickly mention this, I'm actually not selling any courses today because it's not set up, but I just wanted to mention that this is the turnout for one of my HMO tours. So I don't know how many people that is, but 50 people come down because we've always got multiple projects in the area. People just come down, meet up, and walk around the projects, and you can see them at all different stages. So from rip out to the mid stage and then to right at the end. So. But this is what we're going to be launching in a few weeks. So HMO Academy for everyone, all levels of experiences, education by those walking the walk. A few people have said that today, and a lot of people sell courses and they're not actually doing it, we're actually doing it. A place where you can learn, communicate with likewise investors, build confidence and take action. I think that's important because you can go out, buy a 10 grand course, sit at home, watch all the video, but you still won't have the confidence to take action. So being part of the community and getting someone to hold your hand through that process I just think it's really beneficial, and then obviously the opportunity to collaborate as well. So we'll be doing training on all aspects of HMO, weekly community calls, deal analysis, Q&A, monthly on-site training, HMO tours, one-to-one, access to all resources, access to power team, potential to JV on dealers, will be part of the community that helps and supports. And that's it.
Amazing. Right, I think that was a fantastic presentation.